Gentlemen, hey, how are you? We had our non-farm payrolls and we were chatting amongst the community as one of our trades that our community members alerted us to that he was watching. And this was gold. Yes, I'm going to be talking to you about precious metals today. This is what you missed on Friday.
That's how the movie goes. Intervening.
This is us chatting.
Responses.
As we're catching the gold market breaking out on our non-farm payroll from our premium for our premium community members. So gold was in the process of triggering one of our upside HVFs, and we all jumped in. And yeah, that's some of the entries that we were taking as it was triggering the 13336 trade. So far so good. It has pulled back a little bit. Let's talk about gold generally though. I'm on a bigger time frame, and it's good news. It's the first time in a long time that I'm going to give good news. I've said not yet, not yet, not yet. You've had Mike Maloney, Peter Schiff saying gold, gold, gold all the way through the period that we've had gold, and you've not been able to do anything yet with it. And now we are finally in that point where we might be able to start enjoying. That's right, enjoying. And let's have a little look why we're saying this could be the key moments now where we go bullish. So with a little bit of a pen draw, I'm going to remind you of just broad strokes, a couple of the key levels that have existed for precious metals. So this was your blow-off event, you may recall, and that is essentially a descending triangle giving us a key level that was around 1575. Just run, just run, just run, just run. Bounce, 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 support, and then when it was broken with absolute momentum, there, horrible, down she went. It was also resisted on the way up, and you had to have a little wind up to get above. So it's a key level, 1575, put it in a dark, thick blue line for you. Since then, stale out, stale out, stale out, stale out. What are the other blue lines I've drawn? Well, you might notice that post the bear bottom, that was 16, and I'm doing another video later to follow about why 16 was a more significant year than you realize. Everyone remembers 07, 08. People are forgetting the period of 16 and why, and I will come back to it. But anyway, that turned out to be just leading into the beginning of 16, the bottom for gold, because it had a substantial move up during that period. And it has something to do with what I called the Shanghai Accord, or others also referred to as the Shanghai Accord. So watch out for that. I will cover that more. But this is just about gold. Let's keep it just within the confines of that. Then we had, you know, a pullback, and then you had this long-winded, but the key reason for this other blue line, which is the reason why I started, is this, that, repeatedly there, and then the sell-off, and then again there. In other words, the 1350, that blue line, and remember that was your 1575, is also a key resistance level. You start to get some form of a structure that you could potentially have as a left shoulder. You've got a long, eeky, leaky head here, and you could then end up with this as your right shoulder. It's a bit of a deeper dip right shoulder. I'm not so mad for that, but this one was quite complex. So 1350 could also be a neckline from the lows round about 1050. Remember, we traded below 1050 at some point there. So you got 1050 to 1350. I like it when they keep the math simple for me, because that's giving you around a 1650 level. So you've got a cluster of levels here. I'll tell you why the purple level is important just now. 1560, 1575, 1650. That would get you up to and topping out potentially somewhere in this zone here. Somewhere in that big macro zone, because we'll explain to you, wow, that's a big number, Francis, you've just thrown out. Well, let's start right where I showed you on the Vimeo clip. Let's drop the time frame. Let's drop the time frame as to why we were jumping short yesterday, or was it yesterday? It was Friday, sorry. Friday. Why were we the snipers on their non-farm payroll get together jumping in short? Well, let's cover it. Here it was, here it was, here it was. We've allowed this big move. Incidentally, you got, let's get a little bit more of that trend. Clearly, you can see the trend was up. Let's get the pen back and make it nice and thin. You could see that the trend was up. Then you got what we call ascending structure that made its target. It got well supported on its funnel. It came back. It formed a broadening at the target level, then into a falling wedge type structure, popped out the wedge, started to firm up, and then we traded it long, as you saw, getting in there. That's that image over there, us jumping in at the 1336. We were watching it happen live on Friday together, all putting our orders on. And then we got, whoop, wait for it, 1347 key level just run. That is our high 3 of the bigger pattern. So we are showing you our structure that we were getting into over here. Now you might say, oh, but look how much it pulled back. Yes, indeed. The stock market first went down. So non-farm payrolls, we were in this trade before non-farm payroll number was released. Then the non-farm payroll came and it just shot up. And it's just pointing to the non-farm was disgusting. It was a 75,000 new jobs. Remember, it's got the birth-death model that automatically adds jobs in just for whatever. It's a complete fraud of a number. In fact, average wages went down. More pizza delivery boys, more Uber drivers, less surgeons, doctors, builders, property developers, and people doing high-value things. And so all that means is the economy is in a mess. So, of course, the stock market did exactly what it should do. It first sold off on the basis that it's a bearish economy, and then it pumped. And actually, I'll be calling for and explaining in our reset vid that's all about the recession indicators. That will be a separate video to this, which includes a little bit of gold and a little bit of all the key indicators that indicate that we are coming up to fail. When I disclose the year that fail will be, in my best guess opinion, the 07 year and the 08, my take for the 07, 08 year that it is. And by the way, we already are in reset, but it's the softing, the smaller dominoes falling, the one that it brings it into stall year, that you have that eerie tippy feeling, and then the absolute banner event like the Lehman's moment of 08. I will give you my 2 years for that, and you've only got a certain amount of preparation time left. But anyway, this is about the gold specifically. So that people will say pull back. What did the stock market do? Went back up. Why? Because the Fed, who was tightening rates and telling us it was tightening rates, and I said, liar, you won't. You're going to do a U-turn. Did the U-turn, complete volte-faced U-turn. Then we said it absolutely won't be, never mind the next up rate being up, it's actually going to be down, and it's going to come sooner than you think. Right away from that, we've now got the Fed assumed to be way more dovish on the basis of a terrible non-farm number coming out. Okay, they like to crash the economy on a white male conservative. They did it with Bush. They will do it again with Trump. They'll do it during his second term. So I'm already guiding you where that's the 4 years it's probably to happen. And I will tell you it in the next video. Anyway, this is all about the gold. So let's just keep it gold for now. So yes, there will be a little bit of easing, but overall, you're not going to put the genie entirely back in the bottle. We would expect our funnel levels to stand. That's way down there. And then to rest a little bit before building up again. When new Fed easing news comes, more signs of weakness, etc. They've hollowed out the middle class. It's a Gini curve of billionaires and trillionaires, a few people making some money, and then a massive blue collar class. They've successfully done that, and that's the road to communism, an oligarchical class of Burgoy and the rest peasants, and that's the game. Anyway, I'm straying 2 bits. I can't help myself. Let's clear that and let's go back to the chart. So let's go a little bit higher time frame. So that showed you the pattern, that showed you the entry that we were taking right there. We're happy with it, even though it had a higher net value at the peaks there than it has now. It's a good hold. Our stop loss is there, and we'll be looking for not just this pattern to perform. So if we clear it down, whoop, let's close that. If we clear it down, so the target for our structure is up at 1351. 1351, just below that 1352. We will not close that. We will hold over for the big part. You could do a partial close and try see if you can get a little bit lower down. It's dangerous. You might miss the bus. Okay, going back up the time frames. Let's have a little look and see. So you can see how well it's done out of this overview here from the 2 hour, 4 hour. Let's get some lines back in. This was what I like about the previous. For a while, I didn't particularly like this bigger structure pattern because it kind of had this big lazy second impulse and quite a deep dip down on this move over here, and that was all, I suspect, during the Fed tightening fake out period that quickly started to get called out for the lie that it was. I did like this falling wedge into the low here and this impulsive move out of that. So that is what we've triggered. We've triggered our third. That's the first, that's the second, that's the third. We've triggered our third high. So this entire setup is now a live triggered setup. Now on the macro level, you could play with your stop right down there, but we've taken the little one and we're going to be a lot tighter to boost our risk reward, but we won't trade for the 1351 target. We're going to trade all the way up for there in the 1559. And I also mentioned to you there's possibility I would take some off just because it might get a bit choppy. It's not going to be a straight line up curve. It's not the parabolic. You don't go from here necessarily to parabolic, but it is the first setup in a new trend for us after this long bear trend that the likes of Peter Schiff and Maloney have been saying buy gold, and it just kept getting cheaper. You've got to have timing. As I said on the Tesla, a great legendary asset manager like Stanley Druckenmiller has been short Tesla, but he had to close it with big losses. He didn't make money. He's fundamentally right. His timing was wrong. He needed to capture the moment. He needs HVF method. But anyway, so the bear market, all of this, from when you properly let go, yeah, it was an absolutely confirmed bear market, despite the blow-off already giving you the clue. So that is all been bear. Little bear with his ears and his, yeah, there he is. Quite a big fat bear, actually. Let's make him big and fat. And now what's actually happening is, since this choppy, low fee second impulse, strong, but actually we're now building up, and this is getting the signs of, wait for it, watch the artist at work. Yes, indeed. Snorting overdue bull. Yeah, so that is, this structure will take you up to 1575, and the other, if you took the left head and this as right shoulder, and you took the neckline as I've advised, 1350, you will end up around 1650, which makes absolute sense because this was a dominant line and needs to be psychologically taken even if we pull back below afterwards. So there'll be a number of rest points. There'll even be rest points here. There'll be rest points as you run 1500. There'll be rest points as you run this cluster before you get up to this. So there'll be a bit of churn, but back up there we will get, and that might give us a huge impulse for the whole bull bear market, which we'll call a relative high 1, and this will then be the relative high 2 potentially for a future breakup not too far away. Possibly this could get rushed, it could get squeezed up, it could be ascending of structure. So anyway, so this is why we are flung and swung finally bullish precious metals. And there will definitely still be some difficulty, I expect, in getting through and holding above the 1350 level. So if we go up there and then we dip back down into this funnel or range, don't get upset. This level should not run on the macro pattern. We're expecting our small pattern to run but work, but once it's done that, you could dip deeper for a bit as they try say, no, everything's fine, we'll still be, the economy's fine, we don't need to be doing X, Y, Z, etc. That'll just bring you back in here. I wouldn't expect to see this red level right here, 1332. Again, is as part of this bear market. In other words, that low is now largely in my view. On balance of probabilities, can be wrong, and I wouldn't expect us to run that level. That's a long, safe stop for me. But there's always 10-15% that I'm incorrect. So gold bias bull now. However, chasing at these very high levels, and you could be sucked into a blowback after our 1352 is in on that. So this is great for investors buying and holding for the reset. It's a triggering event. It's probably the last chance for sub $1350 gold for quite some time, I would imagine, and maybe never. Okay, central banks are buying the bejesus out of it, particularly Russia and China, but other central banks are now joining in. They're going to probably form, I'm getting into Reset Sniper and I'm going to save it for the other video, but they're probably going to form a future currency which will have some gold in it, for which that will add some purity to all the shit currencies they're going to throw in a bag and say, alchemy, portfolio of shit, amazing new world currency. Okay, so a bit of gold in there will get the old stalwarts and some people feeling that there's some quality in there, even though I'd expect it to be quite small as a percentage. Okay, that's the Market Sniper coming at you, bullish gold. I didn't even touch silver. I've got to show you the silver gold ratio. So for those that have doubts that we've got upside to come, this is at, for my data that I have, literally, let's get more of this on, please. Literally at all-time highs, doing a shooting star. Let's show you last time it was this high, and it truly was a moment you probably won't forget in economic history, and that was right here, which, if you check, is the mania of the Lehmans, when everyone rushed into the dollar in fear. And next time, I'm not so sure it's going to be the dollar that gets rushed into. Remember, we have both cryptos out there and precious metals, and that then led eventually, with all the QE policies that got triggered by that, to the huge drop in the gold silver ratio that actually saw silver go up to just shy of $50 while gold was in the $1,900. You are at 89.29 and you touched over 90. You didn't even touch 90. We are higher than we've ever been in the gold silver ratio. So if gold's a goddamn buy, silver's a screaming buy, and so, as I've already done, is platinum as well. So is platinum. Precious metals complex. Gold is going to be convenient because you can get a big amount small, and it's what the central banks have been chasing. But for those of you that do not have huge amounts and can have a little bit of space under the floorboards, silver will go up in percentage terms even more once the layman realizes what the bankers have been doing and needs to hide smaller amounts. And it's going to be absolutely needed in all your tech and all your industrial use. It is being consumed. Not every bit that gets sent out in tech gets recycled back in. So big precious metals bull across the board. But first, the boss moves, the God market, gold. But when the others start going, expect this to run into deep trouble and come down, which is excellent for both silver and gold because they'll both be going up. Silver being the higher beta will go up further. Platinum too. Okay, I'm not going to do all the crosses. Go do your own research. That's my take. Could be wrong. Bullish moments for gold. It is now asserting. Got to get over the 1350. Buy. If you want to find out more, and if you want to be on a non-farm payroll, taking the trade as it breaks, you've got to be part of the community. Not for everybody. You've got to be prepared to learn and grow. You've got to be prepared to invest. Do you want to become a lifestyle trader? It's all more details on our new website, themarketsniper.com. Bye-bye, guys, and enjoy your weekends and enjoy the coming reset. How prepared are you for what they're bringing down on us? And you'll get my time period for that in another video to follow.